All right, let's start with the Fed, but we've got a lot of ground to cover. What are your expectations when it comes to the outlook? I think we all know there's not going to be a cut, but when we're talking about the outlook, what are you expecting and how do you see that impacting the markets in the near term?
Yeah, it's a good question. I think the focus will really be on the number of cuts that are going to be penciled in. Our expectation is going to be that it's going to be around 2 cuts still this year. I think there's a possibility that maybe some FOMC members will go down to 1. I think that's what the Fed, the market will pay attention to for the most part today. Also focus on, some of the outlook metrics on inflation, perhaps, and also the labor market that are also part of the Fed forecast. So those are the 2 things I think the market will be paying attention to.
Philip, I want to bring up something that we're getting from our CNBC Fed survey. A couple data points. So like most people, 100% of the people that we survey believe that the Fed's going to keep rates unchanged. They see a 38% chance of recession. And this is the part I think is really interesting. They see the Fed funds rate at the end of this year at 3.89, significant downside move. So it's kind of interesting. As we're looking at a possible recession, they see rates moving lower. What else do you think has to happen for potentially this scenario to play out? Does the tariff situation need to be resolved in the very near future? What other things have to happen in the Middle East to keep oil prices down? Because obviously that impacts inflation. Kind of give me the setup if you think that this is feasible. What has to happen?
Well, I think the inflation picture, I think, is really what's top of mind. We haven't really seen an impact in the last, the May report, really. And I think that's where, the Fed over the next couple of months will really kind of pay attention to whether we'll see a more meaningful impact on the inflation picture. And I think that's going to be ultimately what can give the Fed the ability to cut a couple of times this year, which is our base case, as I mentioned. I think the Middle East, situation is, another kind of wrinkle into the macro picture. If you think about it, it's another sort of, supply shock, if you will, on the oil side. And so I think markets will pay attention to that in terms of how that's going to evolve.
Right now, we're looking at the futures. They've actually kind of moved to the upside throughout the morning. They were kind of flat earlier, now moving to the upside. Some of the stocks moving at higher seem to be defense stocks. We were just looking at it a short time ago, stocks like Lockheed Martin, Northrop Grumman. What's your view on those? Now, some of those, they're kind of underpriced when it comes to the market as far as valuation. Others, like an RTX, a bit more expensive than the market. Do you believe that there's a valuation play there? Or do you think all the run-up in these stocks is already kind of priced in the fact that we're getting Middle East conflict, that we have conflicts in Ukraine still, and that we have some other global hotspots that investors are already aware of?
It feels like more of a temporary move. Obviously, the news over the past a couple of days was in a more hawkish rhetoric out of the White House, and I would say the move we've seen in those stocks is probably more related to that news cycle. If we look at opportunities, if you think about valuations, the previous correspondent talked about healthcare. If you think about valuations, I think that's probably one of the key valuation spots right now in the U.S. market.
I don't know if you remember, I'm sure you do. The U.S. credit rating got downgraded a bit ago. One of the issues was just our debt, our rising debt, and the potential of also this big, beautiful bill increasing the federal deficit by $2.4 trillion over the next 10 years. One of the ways we obviously service our debt is by selling treasuries. When we're looking at the treasury market and also this Fed decision, what's your view of treasuries overall, whether it's for your investors or just the fact of yields and the impact that they have on domestic policy? Peter Bookbar from Bleakley Financial was on our air yesterday. Came out with a very interesting stat. He said about a decade ago, 50% of our treasuries were held by foreign buyers. Now that's down to about 30%. And the U.S. is involved in a lot of geopolitical issues. How do you see that impacting foreign buying of our treasuries and, of course, the yields?
Yeah, look, I think the fiscal backdrop has definitely been kind of a source of some volatility on the long end. We still like treasuries as an investment. We do favor the intermediate part of the curve, not necessarily the long end, given some of the volatility that we've seen. But we continue to think that the news cycle around the budget bill that's going to make its way through the Congress in the weeks to come, can provide sort of impetus for a bit more volatility. But Morningstar has a ratings agency. We're actually held on to our AAA rating for the U.S. government, and so we still like treasuries as an investment, and probably some sentiment related volatility we've seen on the back of the Moody's downgrade a couple of weeks ago.